Good morning. It is Tuesday, March 26th. I get my Tesla back today from the body shop. Had a bunch of stuff touched up, just delivery issues. Wasn't a big deal. And yes, I was being a pain in the ass, but I am getting my Tesla back today. So I am going to go through these things pretty quickly. One thing that I wanted to point out about Seeking Alpha is, we talk about the quant. And if you haven't seen my interview with Steve Kress from he's the head of the quant rating, quant strategy at Seeking Alpha, go and watch it on YouTube. Trust me, it's an hour of your time, even if, and the reviews are, even if you're not a Seeking Alpha subscriber. He goes over fundamentals in such a way that it makes you look at, hey, I need to look at this. A couple of things that he really brought up was, one, Wall Street price targets. These guys are monkeys. Go and see how many of them beat the S&P. He doesn't believe in their targets. He believes in his quant much more. And the other thing that I wanted to bring up is, his quant rating. He goes over where the values are. Like, for instance, we can look at DELL. DELL just had a MACD cross up on my 4-hour algorithm in TRENDSPIDER. Well, let's go over and let's look at DELL here. It's a strong buy in the quant. It just became a strong buy. So all of this points to we should be in DELL. 100% we should be in DELL. So I want you to look at that. I want you to look at, how Seeking Alpha can help you. One question that I had from a subscriber yesterday, a listener, was, hey, I don't have much money in my account. What should I, what are the tools that I should get? Well, first off, if you don't want to pay for tools, don't feel like you have to pay for tools. This is a lot of work to do this type of thing, to manage and to trade and to look at. So if you don't want to do it, you have FinViz. FinViz is a great starter tool that is 100% free. Bookmark it, understand FinViz. You can go to YouTube, just Google how to use FinViz, and everybody shows you how to use FinViz. So don't think that you need to do it. Seeking Alpha also has a free tier where you can sign up, use my link, and just sign up for the free tier and see what you get. If that's enough for you, then go about it. If that's not enough for you, or if the ads on FinViz are working or aren't working for you, then sign up. It's $189. FYI, it's $179 tomorrow. There will be a sale. So I'm not supposed to say that, but if you want to save $10, there's going to be a sale tomorrow for $179. So hold off until tomorrow. But what I really like about specifically Seeking Alpha down here is you can go down tech stocks, the latest analyst strong buys. And it gives you large cap, small cap, mid cap. Recently viewed stocks with ETFs and quant ratings. And this gives you, again, it's broken down. Discretionary stocks. Say you want discretionary. Lennar Homes, top one. Ralph Lauren reports later this week, I think. Toll Brothers, great. Dick's Sporting Goods just popped up like 10%. Financial stocks, say you want to go into finance. Well, here are the latest analyst and latest quant ratings from these. So you can take a look at it. That's why I like Seeking Alpha. I just wanted to go over that because essentially this morning I'm going over the trending news and I'm looking at it and I thought it was important. Here's TrendSpider. If you want my algorithms in TrendSpider, you know where to go. Linktree, linktr.ee/daily stock pick. My algorithm here on the Qs, if you trade in and out with the algorithm over 24 months, 23 positions. So once a month you trade, 28%. If you bought and held, 24%. So it does outperform. Remember, this is an algorithm that uses the MACD and it uses moving averages. It doesn't trade for you. It is simply a guide as to when to get in or when to get out. And when you get in, 448, you're at 444 right now. In pre-market, you're at 446. So you're up 0.33. We went over it yesterday, how seasonality, again, this is how TrendSpider can help you. Seasonally, for the last 19 years, this is a very good week for QQQ. And how do you play that? Well, you play it on TQQQ. And I mentioned yesterday that TQQQ, it was looking weak, and that I didn't trust the 4-hour on it. I really wanted to look at confirmation on the 65-minute algorithm, which again, you get when you sign up for TrendSpider. So the 65-minute algorithm, it has us in at 65, got you right back out yesterday. So it's been trading in and out. It's been fluttering. I know some people got in QQQ early yesterday at about 62, maybe 62.50, somewhere in that neighborhood. Again, if you're playing the seasonality of this thing, you're fine. You're absolutely fine. You can see on this one, on the 65-minute, how that 200-day provides you support, how these Bollinger Bands are cinching up. We're getting ready to pop. And my guess, again, just the trend of the market, I guess we pop up. So TQQQ, I think, is an interesting one. Now, if we look at the biggest movers of the day, STOK skyrocketed 99% following results of their drug. This isn't something, tech stuff. It does. It pops 99% on some of the drug stuff, but it can also fall 99% of the time. That's why I don't do it. MicroStrategy, MSTR, increased 4% as Bitcoin surged, reclaiming the 70,000 level to start the final week of March. The price of Bitcoin, the leading cryptocurrency, rose by 5% to 70,550. Bitcoin has been experiencing a correction over the past week, dropping from its all-time highs of 73,000 to about 60,000 last Wednesday. Now, I've said it before, MicroStrategy is a levered ETF on Bitcoin. What they do is they take their earnings from Bitcoin. They basically buy Bitcoin, and then with that value of Bitcoin, they go out and they borrow money in order to buy more Bitcoin. So in a crash, this is unbelievable. This will crash unbelievably. But look at this algorithm. The 4-hour algorithm got you in. It got you in on January 25th in the afternoon at 461. Where are you right now? 1856. You are up 309%. And you know what? The MACD just crossed up again. So we've got, in the 4-hour algorithm, you've got another bullish signal that this one's moving. Yesterday's afternoon candle was a 14% period. If you want to trade this one in the 65-minute algorithm, which is what I would suggest doing, you do only make 184% over 8 months. And I say only because if you bought and held, you're up 312%. Now, what does that mean? That just means to me that with 93 positions, I can look at getting in and out of this, but I've got some protection. And the reason is because your average win is 7%, your average loss is 1%. So this one gets you nice and in and out. It avoids those huge kind of drop-offs that you might see over an extended period. Now, the 4-hour algorithm, this might be a good one to trade because this one, over 24 months, you have 22 positions. You are up 837% versus the asset performance of buy and hold of 297%. Are you happy with 297%? Absolutely. But this 4-hour algorithm actually keeps you out of the bigger drops. So you can see, got you in here, it got you out here with a 7%. I actually would have gotten out with 102%, but it got you out with a 71%. It lost confirmation. Again, the algorithm is just a guide. You can trade this when you want. So this one got you in. I probably wouldn't have gotten in until you had confirmation, which is around $500. Well, at $1,800, that's still a 300% gain. So understand, yes, it's one of the biggest movers. It will move. Tesla. We'll look at a story again on Tesla. 3% after Italian newspaper reported that officials at the industry ministry contacted the electrical vehicle maker about potential electric truck production. This development adds another layer to the ongoing speculation surrounding the location of Tesla's next gigafactory in Europe. It's hype. There's nothing more. I mean, understand, yes, Tesla will spend more money to get into something. This is a news story of not huge proportion. This just means that Tesla may open up another factory. Right now, Tesla's got an issue with demand in my mind. I think you wait until March, the quarter end. So at the end of this quarter, sometime next week, they will release their quarter deliveries, their quarter up-to-date deliveries. That's what you want to look at. I am one of them. I got delivered a Model Y at the beginning of March. It's now cheaper than when I bought it, but I got to transfer my my full self-driving over. One that moved yesterday that I really want to look at is SMCI. SMCI was up 10%, 11%. We regained confirmation. Algorithm got you out here with 184%. It will get you back in today. I will be buying this again. I got out at 1,100 in pre-market. We're at 1,087. If you watch my interview with Steve Kress from Seeking Alpha, you will see why I like this stock still. It is not overvalued. Absolutely not overvalued. So I want you to look at that one as well. I will publish that in the newsletter. Tom Lee, this was amazing. An interview to watch. It's a minute 31. Go and watch it because he says that IWM could increase by 50% this year. 50% would mean a $1,000 gain. So it's trading at about $205. The Russell 2000 is trading at 2,000. This is kind of like SPY. It just follows it with a tenth of a point, 1-0 taken off. But IWM, he says, could go from 200 to 300. That's a 50% move in a year. And he justifies it by saying that the valuation is low. He justifies it by saying that the PE, it's trading at about 26. The rest of the market's trading at 26. The IWM is trading at about 13. Well, IWM right now in the quant is a hold. Its risk is D-. And the problem is, if you have higher for longer, IWM is the problem. IWM with a lot of these names, they're not making money. They have to take on debt. Remember, higher interest rates don't hurt the wealthy or the people that have money. It hurts the people without money. Same for companies. The companies that aren't making money, that's who gets hurt in this. So at $205, are you taking the risk? Listen, Tom Lee has been more right than wrong. I think some of his calls are crazy, but he's actually called, like on some days, he's called, hey, you can get a rally of 2% if the Fed says this. And he's been right. He's been 100% right. So I think it's worth looking into. I think it's worth trying to use the 4-hour algorithm on this one. 4-hour algorithm has you in at 208. It's at 209, 205 right now. You're setting up with some volume candles, even if we pull it back here to where it popped in December. And it's just kind of traded sideways, a little bit up. But you can see there's a good volume shelf up here. If we pull this back, good volume shelf building up here. Obviously, the biggest volume shelf is around 195. That's where you traded the most. But the Bollinger Bands aren't like crazy out. The 50 days moving positive, the 200 days moving positive. Your RSI is in no man's land at 53. Your MACD is kind of in the center. So in my mind, that might be an opportunity for you to look at this one and move in. Again, IWM. Enbridge forms U.S. Gulf Coast gas supply with MPLX. I love MPLX. MPLX is in our core portfolio. MPLX is up 0.59%. It reached 40. It's kind of just been trading around this 40 level. If we look at MPLX in the quant, let's see, is it covered in the quant? I don't know. MPLX, strong buy. Strong buy. So, you're looking for some exposure to energy. This one has just been a winner. In the algorithm, it actually loses you 3% versus making 23% over 24 months. I actually wind up just holding this one. Honest to God, I just wind up holding it. I don't look at the price of it. I just hold it, and when the dividend is paid, I just reinvest my dividends. Look at this weekly. I mean, again, 2 years ago was around this time. And I don't know how you've lost money in that algorithm. You've made 23% by just buying and holding. The problem with a lot of my algorithm, the 4-hour algorithm on stocks like this, it doesn't move enough. And so when you see a lot this kind of large movement from October, that's good for this. So if you were just to look at this over the last kind of 4 months, you've made money on this. But if you look at it going back further, it just kind of traded sideways. And that's why you lose money on this. You win 48% of the time, but your average win is 2.77%. So it's not trading enough. So in my mind, this is a buy and hold. I think this is a buy and hold, 100%. ARM is going for it bright and early this morning. It was up 5% yesterday. This is not in the core portfolio. This is a recent IPO. I like to wait 3 months for it to come out, but it's been popping. This one has been nuts. The algorithm makes you 118%. It got you back in here at 135. And in pre-market, you're at 140. So this one, again, it's been 6 months since it IPO'd. And if you bought down here at 49, fantastic. Your average win, 37%. That's because of this 82% move. But it's trading sideways. It's putting in a nice little ground floor here at 117. If you want to buy this for the long term, go have at it. Have at it. I think it's fine. The valuation is a little nuts. If we go over here and we look at ARM in the quant, it's not covered in the quant. They'll cover it at some point in time. This is an AI hype. So expect this one to maybe pull back a little bit. The valuation, nothing's there. There's not a whole hell of a lot. You look at the PE, the forward PE, it's at 115. The sector median is 25. You look at the PE trailing 12 months, 1,718. That is 5,806% above the sector. It's just expensive. So understand this is hype. It will be like Rivian and those other ones. It should come down, but you can trade it in the short term. BABA. I think TrendSpider put it really well here. We're convinced they could give this stock away for free and people still wouldn't own it. And that's true. I don't want it. I mean, I've told you before, you can trade this one if you'd like, but that trend down, it hasn't stopped. It literally hasn't stopped. My algorithm loses you 1% over 24 months. Buying and holding has lost you 36%. So the algorithm actually protects you with an average win of 9%, but your average loss is 4%. You only win 34% of the time. And that's because, look, the 200 days moving down, the 50 days moving down, everything's moving down. Do not think you can time this. This is trading for lower than it was when the world was shut down in 2020. The world was shut down in March, and this stock was trading at 178. Right now, it's trading at 71. It is bad. It is trading at levels that we haven't seen since 2016. So it's bad. Stay out of it. There was a news article in Seeking Alpha. Alibaba abandons Hanoi, Hong Kong IPO, plans $3.75 billion stock buyback of unit. I mean, there's nothing that's going to bring this one up. Wait for it. Do not try and time it. I read this article yesterday on NVIDIA about the Blackwell chips. What's the buzz? According to NVIDIA, the GB200 will be the world's most powerful chip. Why it matters. Remember when GPUs revolutionized gaming and computer graphics, Blackwell represents that level of potential upheaval. But for the AI revolution, with this new hardware, AI companies can finally realize their most ambitious visions. Think hyper-realistic virtual worlds, Apple Vision Pro, curing diseases because they can run incredibly heavy compute models through and do different kind of simulations, and rapid digital drug testing, and even quantum computing, all at lower cost and energy consumption. That's why you want to buy NVIDIA. That's why Jim Cramer is saying you absolutely want to get into NVIDIA. It will have a couple of choppy months, but I think you're seeing it's just taking off. It capitulated right here at about the $900 level. If you don't have a position, start a position today. Add, if you say you want $1,000 in there, put a couple $100 in today at $950. Because if it does come down here to this $750, you're just going to add a couple $100 more. Just make sure you have exposure to this, either through an individual stock or an ETF. Understand what you're investing in the ETFs. So take a look at that. I thought this was a fantastic, fantastic chart. For AI semiconductor value chain, you can take a look at it. Here's all the companies. Chip design, you've got ARM, NVIDIA, AMD, Intel. I would put Apple up here as well because they do their own chip design. Components, Taiwan Semi, Intel, Micron, Samsung, Supermicro. Manufacturing, Taiwan Semi, Samsung, Intel. Networking, NVIDIA, Arista, Marvell, Broadcom. Outside the rack, you can look at all these. Powell Energy is in here. Veritiv, Schneider Electric. You can look at manufacturing equipment. There are some that are missing here, but this is a great chart. If you do not have exposure to AI, get some. Whether through an ETF or a single stock, that is a great chart to look at. What's a better return, NVIDIA or Bitcoin? It's dark and delicious. Yeah, this is a good article. I mean, what do you want to invest in? NVIDIA or Bitcoin? Bitcoin has been going nuts. And it, Tom Lee says $100,000 by the end of the year. It's trading at 73. Let's see where Bitcoin is. BTC. Let's look at it real quick so that I can look at it. BTC not covered by the quant because it's a crypto. It's at 70,850. So it got up to 73,000. 52-week range, 73,000. Right yesterday, it got up to 71,000. So if you have exposure if you want MicroStrategy, like we went over, is the exposure, the levered kind of thing. Reddit's up another 11%. I'm seeing on my TV. Fisker, FSKR, it was delisted. That's why you can't find it on anything. It was delisted yesterday. Reddit went nuts. Went up. There were two that went nuts. It was Reddit. You can see this candlestick, a 10% move in the afternoon, a 14% move in the morning. It's the options market. That one and ALab, which was another recent IPO. These two went nuts. Look at this one, 9% move in the morning, 5% move in the afternoon. And ALab is up another 4%. ALab overvalued. Don't get into it. I don't think that it's something that you want to get into. But understand, it's a little harsh there. Disney, I thought this was interesting. They had a nice debate on yesterday. And I've kind of, sworn off Disney. I don't think what's interesting about the shareholder meeting next week. And if you don't know, you can look it up. Disney is going through a shareholder meeting next week, and they are basically going to try and elect a board. And it's whether you trust Bob Iger or Nelson Peltz. It's this board battle. It's been really good for the stock. And their last earnings, they threw everything in the kitchen sink at it, and it raised the stock. I think you've hit an inflection point here. I think you've got up to this 200-day. You've got 126 in the stock. I think you do hit that. And it might be before next week because you're at 119 right now. That's not a lot for this stock to move in the next week before this shareholder. So I think your 50-day is starting to move positive. Where do I think you get to? Well, I think this 150 is kind of interesting right here because if we just put a line at 150, you will see, right here, we're going to put it at about 153. That rejected back in 2019, shot up, and it didn't start here, but it shot up over this. Then you had a couple of capitulation days right around here where it used it as resistance, went above it, used it as resistance again, and then went down below it. And that's when the slide off happened. So I think this level right here provides you some interesting move. Now, 128, 127 is another interesting one where in August of 2022, that one rejected off of. You're moving right now with the VWAP. If we move this VWAP back to the all-time highs, where are people holding? Well, the majority of people are holding down here, but you've got a hell of a lot of people up here at 174. So in my mind, I think this moves, and I think next year when if Disney is able to turn a profit next year, I think you see this one back up here at 170. This is not one that you trade. This is one that you get into and you buy and hold. I am holding a lot of Disney, and I am holding it at about, I think, 112, 113. I've been adding on this way down. I added a few. I didn't add a lot, but I didn't want to junk my stock. I didn't need cash. So I was like, Disney, great business. The problem that you have is the value of ESPN with this. If the value of ESPN is overvalued right now, then you have a problem because this company just doesn't have enough debt to do it. But the parks are moving. Everything that Bob Iger has put in place is moving. So I like that one. Viking Therapeutics, we talk about GLP1 all the time. And GLP1, it's moving, again, Data loss therapy. Let me see. This is, that's the Bitcoin one. Viking Therapeutics gains on early data for oral weight loss therapy. It's up. VKTX. Let's look at VKTX because we went over Amgen yesterday, and I think Amgen is more interesting than this one. But this is a weight loss pill, and this one is up 12% to $77. Look at what GLP-1, just rumors, can do. Now, you've had this MACD. Look, you set this right here. You capitulated right at about 65, 70, and then you've taken off. And today at 77, you're going for the next leg up. This is a bullish move on a stock that is fairly, RSI's at 61. It's going to quickly get overbought. And this MACD is going to quickly move up. But if you're trading, this is one that you may want to trade. It's an interesting one. And I like this one. I like that news. You can read this article. In the quant, it's a strong buy. And we can look at the quant. We can look at the Viking Therapeutics. It's got a valuation C-. That's not a D. That's not an F. Profitability is a C. They will move that with GLP-1. Do not worry about that. They will move that with GLP-1. Ranked 3 in the industry. So VKTX, if you want to get this one, I think it sets up nicely for a move higher, even at 77, 78. I like that one. I like that one a lot. Read up about it. Tesla, here's the news article about the government officials. I don't think this is anything that should move the stock. I think this is nothing that should, this is just news that anybody's waiting for something positive to happen on Tesla. I think it's putting in that nice little floor between 170 and 180, and it's at 178 right now. You've started to move the needle on the 9-day. You have not moved the needle on the 50-day. So I would absolutely be careful buying here. The algorithm has you in at 172. Great if you bought it at 172. The MACD, well low. This was an oversold stock down here at the 160s. So it just moved back up. If we look at the weekly, this is a weak stock. Pardon the pun. But it's below the MACD. The RSI is at 40. And you're below the 200-day. You haven't started to really move the 50-day. The 50-day is still moving negative. It's kind of bouncing around there. But the valuation on this one is nuts. Don't underestimate the valuation of this because the valuation is an F. In the quant, they have it as a hold. And you can see in the sector, the peg for growth. The sector is 0.59. Tesla is 2.4. Now the forward is 3.66. So you're 134% above where the sector is trading. Is that good? I don't know. I mean, you can do your own research on this one. Just the valuation is nuts. The quant has it as a hold, Wall Street is a hold, and Seeking Alpha analysts have it as a hold. So take a look at that one. I am, my parents hold a lot of Tesla. I've asked them to get out at 70,000. They don't want to get out. Just FYI, by the way, SMCI is back up at 1100. Just so you're aware. Tesla, Terrence Patrick Preston wanted me to look at it. I just went over it. If you want to trade this, and this is what I would suggest. I own a Tesla in XLY, and I own a bunch of XLY. And if you look at, if we go over here to Seeking Alpha and we look at XLY, what I'm going to do is show you the holdings of XLY. And the reason I'm going to show you the holdings is because, I don't want SLY, I want XLY. It just automatically changes that. Okay, we'll go to XLY. And then you go over here to holdings, and we'll look at it. Amazon is the top at 23%. Tesla is the second at 12%. I have exposure to Home Depot, McDonald's, Lowe's, Booking, Nike, TJX, Starbucks, Chipotle. Total holdings of 55. You can see consumer cyclical, it's 98%. This is the consumer discretionary one. I own this one, and I own a lot. That's my exposure to Tesla. So, and it's ranked 18 of 24 in the quant. U.S. home build construction is the cyclical ETFs. This one's even better. If we look at this one, let's chart this one because let's look at this. We'll select symbols, and we're going to get rid of the S&P, and we're going to do XLY. And this is how you use Seeking Alpha. This is why I say Seeking Alpha is so good. Look at ITB. Over 1 year, it's blowing away XLY. Look at 3 year. Look at how good this quant is. Again, it froze up on me a little bit, so I'll edit that out in in the replay. But look at ITB. Look at how good Seeking Alpha is at guiding you. XLY completely underperforming ITB. Now, does ITB continue to go? We can look at the summary of this one of ITB. Strong buy in the quant, buy as far as seeking analysts. Let's look at the holdings, probably home builders, I would think. Yeah, DR Horton. Lennar, if you want to access, builder's first resource, I own that one. I own that one outright. So I may want to buy this one, ITB. I like this one. Home prices will continue to go up. We'll continue to see that. So again, if you want to own Tesla, I'd say trade it in the 4-hour algorithm. The 4-hour algorithm makes you 57% over 24 months, 22 positions. So Terrence, if you're not trading with some type of system on Tesla, I would say find a system that works for you and back test it, because I don't think Tesla is one of these stocks that you buy and hold. Even though, mind you, that has worked. Buy and hold has worked better for Tesla than my strategy of buy and sell and trade it. But the 4-hour algorithm is back tested. It is completely good. Colin wants me to look at GME. The king of meme stocks. So they have earnings, I think, today after the bell. Yep. Today after the bell. It's run up. I mean, it is up 1.98%. It was up yesterday. I mean, we have candles of like 10%. It's hugging around this 200-day. The 200-day still moving negative. The 50-day still moving negative. I have no idea why somebody would put money into this one. I don't get it. I mean, it's making no money. And it's not like Ryan Cohen has come out and said, "Oh my God, this is we're going to do this, and do this." My guess, he has a 5-minute press conference, and yeah, I mean, it's, Upbound Group is number one, and that's still not even that great. Best Buy, Smart Share Global. I don't understand this one. I don't understand anybody's interest in this one. It is dangerous. I had a cousin who bought into this during the craze, and it went up to like $400 or $500. I said, please sell. And she's like, no, I believe in it. It did nothing. I mean, you look at the 10-year and you had that spike. What has happened since you had that spike? Since you had that spike, it's done nothing but go down. So I don't know what, here's a good article, what to expect. I mean, expect Ryan Cohen to come out and post earnings per share of 30 cents while revenue expected to fall 8.1%. If you think revenue falling is a good thing, I mean, even though they're going to post earnings per share of 30 cents, revenue falling is not good. Along with top line and profit performance, investors will focus on operating margin of the company. Industry trends indicate a top-line beat in the fourth quarter. Profitability should benefit from a mix shift. Seeking Alpha analyst expects GameStop to post an operating income of $215 million in Q4 and $125 million for the full year, leading to operating margins of 9.4%. I mean, 9.42%? That's horrible. It's a horrible, horrible stock. And so I wouldn't be in it. That's my thing, Colin. There's better gambles in this market than GameStop. Doesn't mean that it doesn't go into a short squeeze and we don't see a $90 target again. But I just don't see it in the works. I just don't. If you think that Robinhood won't stop that again, then you're out of your mind. I mean, they absolutely will. Let's look at the scans. Palantir. Palantir is going for another run. 24.57, it got you in. The algorithm doesn't really work on this. The reason is because it's just been, it's been up and down. And so far in a weekly, that's where you kind of lose it. Now, it got you in. It got you some of these gains because your average win is 17%. But there's 29 positions, and you lose 5% on the average. So you only gain 8%, which is great. I mean, again, over 2 years, you make 8%. But it's 29 positions. It's too much. Buy and hold this one. It is expensive, but you can buy and hold that one. Taiwan Semi. The only thing that's keeping Taiwan Semi down is the political upheaval of China and the potential that China takes moves on Taiwan. Now, it's not a bad thing. Look at that. RSI is right in no man's land at 54. The MACD moved down. We have a cross up here at 141. You make 56% in the algorithm. 32% if you buy and hold. Your average win 10%. Get in at 140 because I think you're going probably to 150, 160, somewhere in that neighborhood. Now, it's scary to think about, hey, it's going to move past its all-time highs. 140 right here, you get a pretty good level of resistance right here at 140. If I put this right here at 140, look at that line. I mean, it just dings it down. So I think you start to see some capitulation here, and this starts to move in this direction. Again, we talked about down here how old support turns to new resistance. That resistance was clear. That resistance was back here. And you can see I bought Intel for a play before their earnings instead of buying into this pop on Taiwan Semi. I absolutely should have bought Taiwan Semi. Bad move on my part. MSTR, we got a cross up and you're back in on MSTR. MSTR is down 1.44%. Do I think you should get this? Listen, if you want leveraged access, exposure to Bitcoin, this is the way to do it. MSTR is the way to do it. Energy is probably one of the biggest laggards in the market right now. CVX, KOLD, the inverse natural gas, that got one. But Chevron right here at 155, another MACD cross up. Again with the algorithm, and your RSI is at 57. Now this one you lose 4%, but if you bought and held this one, you lose 7%. In my mind, I think Exxon is a better opportunity for the oil. You're at 114 on Exxon. I think I sold out at like 105, 106, somewhere around there. I did not do well. I think I sold here. I didn't buy back in. I didn't want exposure to energy. Mistake number one for me. But getting out at this MACD cross down might have saved you 10% in the next 2 weeks if you'd gotten out there. Yeah, again, you look at this. The algorithm makes you 6%. Buying and holding this one makes you 35%. If we look at the long term of Exxon, you can see clearly energy's going for another run. And it's not crazy to think that it could continue to run. Energy, I think with the reduction in supply, I think Exxon and a lot of those oil names will continue to run. Now, one that I am particularly interested in that got a cross up is the bear on Apple, AAPD. This is one that it doesn't make you money. I mean, over 19 months, because it just IPO'd 19 months ago, you lose 6%. But if you bought and held this one, you lose 10%. Got you in at 22. If you believe that Apple is in danger and it will dip below that 170 price point, then you can trade this one. You can trade this one all you want. I think it's putting a nice capitulation in here between the 170 and probably 175 mark. And I think then they say in June, hey, we've got AI. We sparked a deal with Google. Hey, we've got something. And I think then it just pops up. We've got DELL. I will probably be buying some DELL. And I think I just glossed over it yesterday, but I think this is one of the biggest opportunities in the market. Look at how that MACD came down. That MACD just shot down. The RSI shot down. Now the MACD is crossing up. Do you get more capitulation here between 106 and 115? Maybe. But I think this one in particular is going to shoot up even more. And if we go over here, again, you go over here to Seeking Alpha and you use your tools, the quant has a strong buy. So in my mind, I think SMCI and this one continue. You look at number 2 of 27. What's number 1? It's SMCI. So I look at those two and I say, hey, I probably want to look at this one because I think these two are the picks and the shovels of AI right now. And I think they install their servers in the places, and I think it's good. We talked about Sentinel getting a cross up. It's kind of capitulating right here, so it's been getting in and out. 2278 yesterday. 2278. Brad Freeman, the stock market nerd, he got into this one. Dexcom. This is one that Apple, I don't think Apple's going to get into the glucose monitoring at this point. I think they were scared off by the breath rate or whatever that heart monitor was that they had to remove from the watch. So Dexcom is taking off. Dexcom is the algorithm, it makes you 47%. I have said this line right here, 121, was a buy and sell. This went on long term. You could clearly see 120 was a nice resistance point where you kind of went over and then you went down. That right there is not the resistance point. The new resistance point that you can trade in between here is this old high. And that is, let's see, it's 164. I think, yeah, 164. So if we just go to 164 and we put that line in there, that's your resistance. So I think you trade back up to that level. Honest to God, I think you trade that back up to that level. And the algorithm got you in. And the algorithm has a great performance on this, 47%. So it gets you in, even though the algorithm got you in here at 114. There's another cross up, so it gets you in right there. Fortinet, this is cybersecurity. This one kind of got dinged on the last earnings. I played it. I think I made 4 or 5%. I think the price on this one is around $70. If it's under 70, you buy it. If it's over 70, you sell it. And we can take a look at that line right there at 70. You can see it's just kind of used. Look at that. I mean, since February, that's been the line to use. Now, the algorithm loses you 16% on this, so do not look at the algorithm. But from a weekly standpoint, this has just been capitulating here. It's nothing more than just capitulation within this range. You can see between 47 down there and probably about this range, 75. So in my mind, I think you're fine. You'll get up to 75 on this one, even if you bought it at 47. Or I'm sorry, it's 67. There's a couple of other ones that have moved, but if you have any questions, hit me up. Remember, TrendSpider, go over here to Linktree. And TrendSpider right here, it is the top link. TrendSpider has a sale going on 2 days, $595. Remember that when this was $892 yesterday, it's $595 for 1 year. Even the monthly, they knock it down 13% to $129. So pay the $129, get my algorithm, see if you like it. Just be forewarned. I do think 1 month is not enough time. I got a great question from somebody about TrendSpider, and they said, how long will it take me to learn it? I'd say it takes you 2 months. I mean, if you don't understand charting whatsoever and you have to start from the beginning, I always say, get Webull. Webull is the fourth link down here. Get Webull, get the desktop software. It's free. It's absolutely free. You can't do everything that you can do in TrendSpider. TrendSpider is just juiced up. It automates your trade. It takes emotions out of the trade because you get started with my 4-hour and 65-minute algorithm. And you can use my watch list. You can use my scanners. Everything that you see me do, you can do on your own. And you can look at these things. Now, you have to understand that when I look at charts, I'm kind of like Rain Man. I see this stuff. It just makes sense to me. I don't know that, nobody knows exactly what's going to happen in the market. So technicals, we went over it yesterday, technical versus fundamentals. Fundamentals are far superior in the long term than technicals. Technicals for the short term allow you to trade. That's what TrendSpider allows you to do. It allows you to find entries, and my algorithm allows you to find entries even on stuff you want to buy long term. It allows you to trade. If you see a bearish market and you see something turning bearish, it allows you to trim or get out of that position. So understand the difference between the two, because $595 is a lot to spend, but I would push you to spend the $595 over just getting the $129 for the monthly, because I do think it's going to take you a little bit of time to learn. Everybody has a learning curve on this. It is not plug and play. Sure, you can use it as plug and play, and yeah, I make it look simple. Eli said it on Substack yesterday. I make it look so simple, but I only use maybe 20% of what TrendSpider is able to do. You've got unusual options. You've got analysts. You've got seasonality. You've got insider reports, insider sales. You've got bots that you can do. You've got so many things in this software that you can do. It's just unbelievable. So be careful, but understand this one is if you're trading with $10,000, $20,000, this one, in my mind, it saves you that $595, whether it's on the upside where you make the money or it's on the downside where it gets you out, one or the other. In my mind, that's the best one. Second best one, and I think this is more for everybody, is Seeking Alpha. Seeking Alpha Premium, it's a $50 off coupon. Tomorrow, I think there's an additional $10 off. So if you want to wait till tomorrow, do it. But use my link tree and you get that coupon off. And so, $10, you can buy it today. It's $10. Just consider it giving me, an additional commission on this one. But, again, seeking out, I think I showed you how you can go down the rabbit hole with those ETFs of XLY. I might buy that IGT or IBT, the home builders one instead of XLY. I may take the hit on that one because it's just outperformed it on the long term. So, but you can go down those roads, and that's why I like Seeking Alpha Premium. Now, if you just sit back and relax type, this is Alpha Picks. If this is brand new to you, Alpha Picks is fantastic because what you can do with Alpha Picks is they provide you, and they're coming up with a new Alpha Pick, I think, next week, the 1st. It's 2 picks per month, but they give you all of these analysis of everything that they do, and they give you a great portfolio that you can start building. And then they tell you about how to do it. You can go about how they achieved performance. How can new subscribers get going with Alpha Picks? 3 potential strategies. Buy 5 strong, buy Alpha Picks. Buy the entire portfolio using the allocations in the portfolio tab. Use Alpha Picks as an idea generation tool. Read the analysis of each pick and then choose the stocks that best fit your strategy. Those are 3 tools that you can use Alpha Picks for. If you use this link tree right here, you get a coupon. And that coupon allows you 50% off. It's $449. So in my mind, the best value is this second one. I think if you're not going to get TRENDSPIDER, you absolutely should get Webull so that you get the desktop software. So there's my pitch. I'm sticking to it. Hopefully you guys are up today. Again, TQQQ in my mind is probably a good seasonal one. It's a bet. I mean, that's all you're doing is a bet. You're at 62 right now, 62, 66. Remember, we're at 61 in the pre-market. So you're up 0.37% on the Qs. But yeah, I like that one as a bet. Okay, take care. See you tomorrow. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.